Okay, good day. Good evening, everyone. My name's Jen Murtazashvili. I am the director of the Center for Governance and Markets here at the University of Pittsburgh, where I am a professor of public and international affairs. It is really a pleasure to have you with us today as part of our series on the future of development assistance. We're doing a mini series on fintech and development. And it's a real delight for us to have Max DeGregorio leading us on this journey through fintech. Max is an associate at the Milken Institute Finance at the Milken Institute. He's also a veteran of the Center for Governance and Markets. He started his career off with us several years ago, and it's been really quite fun to see his career soar. And he has also led us through this wilderness of a fintech journey. And Max will be doing most of the moderation of the discussion today as sort of the expert. I'll be chiming in for questions when things are not clear for the novice. And we're really honored to have with us Tristan Thoma, who is, I think, a legend in the world of fintech. He builds national digital infrastructure with a focus on digital currency. And he's led the team behind the re-implementation of the first and only operating national cryptocurrency system in El Salvador. And he's advised leading banks in Colombia and Bolivia on crypto architecture. Since 2016, he's designed more than 24 blockchain integration models for Fortune 500 companies, governments, and startups across the world. He has a background in organizational psychology and IT systems, and he bridges technology and human-centric design to create responsible systems that advance financial inclusion, economic development, and resilience. So Tristan, well, maybe I'll give the floor to Max, and maybe Max, you can have some intro
Sure.
comments, and then I'm handing the mic off to you.
That's perfect. No, thank you so much, Jen. I really go ahead.
I was just going to say to our audience here, if you have questions, put them in the chat as we move along, and we'll read the questions as we move forward.
And Jen, if you see those questions, you raise them because where I'm sitting here, I can't quite see them so well. But I really enjoyed doing the first edition of this series last week with you, where we brought in sort of Paul Brigner and talked about some of the issues that were coming up with stablecoin and cross-border money movement and blockchain. But when what I have with Tristan for you all today is a sort of a case study and sort of a conversation about sort of what is possible with this technology and sort of how one government was able to leverage that technology for some sort of surprising results. And then sort of the lessons learned and sort of where Tristan has taken that experience after the fact. Tristan, I would love to sort of turn it over to you. I know you have slides, and if you could sort of walk us through the beginning of your talk, we'll maybe then open it up to sort of more of a Q&A afterwards, where I'll sort of ask you some follow-ups with Jen.
Awesome. Love it. Thank you for the introduction and thank you for the invitation. It's a pleasure to be here. Always running around the world with you, Max, and finding out the incredible people that you are in touch with. It's really a pleasure. Good to meet everyone. My name is Tristan Thoma. I love people, and that is why we do this. That is a very good baseline and premise and really hopefully context for all of this. Ultimately, the objective of all this is social impact so that people have access to money. And with money comes access to food and shelter and security and clean water and electricity and internet and all the wonderful things we have. And I got the opportunity over the past 10 years with a focus on blockchain to work on some really interesting and cool projects. I started in consulting, so just advisory and consulting, and we worked with like General Electric as an example. They wanted to tokenize kilowatt hours for a solar farm for a new financial and investment model in Arizona. And so we kind of made a mixed ledger for tokenizing electricity. And then we worked in Southeast Asia and we put passports and work visas on blockchain so that people would have access to their passport and visa, which is a big issue in a lot of developing countries where modern slavery happens, and that's one of the prime factors. Um, Got to work in Africa and East Africa, putting food on, tokenizing food on the blockchain in a private-public partnership, and then worked with a couple Department of Transportation, US and Germany, following data from cars, kind of thinking and developing what responsible systems would be. Because yes, we want to give up our data so that DOT has information on how to build better roads. But also, I don't want to give up my data because I don't want you to know where I am all the time. So these are a lot of the principal questions. And then in 2021, El Salvador became the first country in history to make a digital currency legal tender. And in this conversation, we're going to focus more on the currency side, the money side of blockchain, where most people have the most interest. Money, money, money. Right? So fintech, in the case of El Salvador, when they made crypto legal currency, it was Bitcoin. And Bitcoin
Mhm.
is a very unique type of cryptocurrency. I'm going to go into it a little bit. I'll probably just jump right into the presentation, also given timing, and make
Yeah.
sure we uh, go into the slides. All right, cool. So we'll go over a few things. First things first, I think Max was excited to bring me here, and I'm excited to be here because I have a unique experience in the world. It's the first national digital currency system, the first time that a non-government currency has been made national currency, at least in the recent human history. In the context of money and macroeconomics, every government has their official currency. Every country has their official currency. Obviously, the US is dollars. Most European countries are euros and or sometimes an additional local currency. I mean, Bolivia now, here the currency is Boliviano. In El Salvador, the money was dollar already since 2001. So they're a dollar country. But they made Bitcoin legal tender. They made a currency that has no association to any government, to any central bank, to any, I mean, it's just internet money. We'll go into a little bit of what that is, but that's a pretty bold move in the context of a country that's not the US being dollarized. They don't have control over their monetary policy. So, from a political perspective, or from an economics perspective of that country of El Salvador, there is also kind of a geopolitical insinuation there of we're not only tied to the dollar, we don't have our monetary policy, our own central bank of El Salvador, we're going to kind of hedge or expand our monetary policy with this other digital currency called Bitcoin. So geopolitically, also to think of it in that way, it's a really interesting context. I want to start by telling a story because in 2021, when I got to El Salvador, I mean, it's a cash country. It's a developing country. For a long time, it was the murder capital of the world. Like, it was intense, and it is intense. And incredible changes have happened since 2021. One of which is a story. She didn't look exactly like this, but when I was living there after we launched the system and the program, um, I was running to work one day and I forgot my wallet, but I wanted to get food on the way to work. And these are called pupusas. Silly name, but pupusa, that's like a local Salvadoran food. And there was a pupuseria, which is the person who sells those. I wanted to get breakfast. I didn't have cash, so I asked them like, "Hey, do you take digital currency? Do you have, some app or something that I can pay you with and not just cash?" Because again, El Salvador is mostly a cash economy historically. And she actually had my app, which was so cool. So I got to pay her in digital currency. She got money and I got breakfast. And it's a very simple analogy, very simple example for, I imagine, everybody in this room. But when you go to places or when you live in places that don't have Venmo and don't have, all the digital banking services that everybody's used to, then life is actually dependent on you having your wallet and you having exact change and you having, like the right situation. It's not as flexible as digital currency. Still happens to me in Bolivia. If I don't have internet and I don't have the right amount of cash, then sometimes I can't buy stuff, even if I have the money. So there was a really powerful experience, and it's a critical analogy in the context of El Salvador because prior to 2021, banking rates were around 36%, mobile money around 11%. And we, and when we built this system, it's called Chivo, um, we more than doubled that rate in the course of it was actually technically 6 months. This chart doesn't give all of
And
the
you're referencing bank account ownership rates. Uh,
correct.
yeah.
Correct. Yeah, so this 36% is bank account ownership rates. 11% are mobile money like Venmo. You can think of it like Venmo. Um, when we built this system, in the chronology of things, it was the president said there's now going to be crypto as legal currency. And now that crypto is legal currency, you need a way to use that crypto. So we're going to make a platform that's free and available for everybody to use. And this is critical because it shaped a lot of how I see and think about the world in that this is a totally new way of a government engaging its people. And we'll get to that in one of the future slides. But as they built this system, I actually was not involved in the original launch. Um, I came 3 weeks after. The original launch had some issues. If you look online, you know, whatever, Google Chivo, you'll see some very unfortunate like public news of technical stuff and fraud. And there were issues. Honestly, there were issues. It had never been done before. To no particular, fault of anybody from the team. They had amazing people, but there were issues in the first version. So I was brought in to actually update it and recreate it. And that system is what onboarded over 4 million users. Over 70% of the population actually has this digital wallet. And you can think of this digital wallet like a Venmo with crypto. Now Venmo has crypto, but that launched in like 2024 or maybe 2023. This was really, I think, the first ever multi-currency implementation or use of money, especially on a national scale. And so you have your dollars, and then you have your Bitcoin, and then you have your transactions. You can send and receive either one of them. You can send it to your friends. You can make QR codes. You can send it to a phone number or an email. If you're receiving one of them, but you want the other, you can convert to the other automatically. So it's not like a dollar, if I don't know what Bitcoin is or I'm afraid of the fluctuation of the price, then okay, I'll just receive Bitcoin because that's a global currency on any application on blockchain. And then I'll convert it immediately to dollars and I'll spend my dollars like I spend my dollars. And honestly, that's how I paid rent because I couldn't have a bank account. I'm not Salvadoran. Luckily, I made a system that allowed me to take Bitcoin. I could buy Bitcoin in the US because of Coinbase, send it to El Salvador immediately and basically for free. I mean, it literally costs fractions of a penny to move and a few minutes. And then I converted to dollars and I paid my landlord because my landlord wasn't a Bitcoiner, of course.
And Tristan, like that loop you described there was part of the rationale for why El Salvador itself decided to make something like Bitcoin legal tender in the country, correct? About 2 million Salvadorians live outside of the country. In the country, there are about 6 million Salvadorians. So it's a huge population that works abroad, and a lot of them are sending money home. And being able to sort of instantly and in a way that's cheaper than sort of your traditional remittance rails, wire transfers, get money back into the country is something that sort of the government thought was sort of an opportunity. My understanding is, and then this app and the development that you guys were able to do around this was able to sort of make that a reality in a sense, and people were able to move money faster and cheaper on this payment rail.
Exactly. And it's meant to be usable on both sides. If you have dollars, then you have dollars. If you want to use Bitcoin, then you can use Bitcoin. And it's a common misconception that everybody thinks that like we're trying to push everybody to Bitcoin. I really don't care. I care about financial inclusion. I care about empowerment. I care about resilience. And, especially now, if we have people, economists here in the room, right? The dollar has a strong history and now coming up with conversations of BRICS and euro and things like this of of like, where's the monetary policy going to go, especially with the dollar? Well, we want to empower it, we want to use it, and we want to make sure that people are safe and taken care of, regardless of what happens within political and macroeconomics. And that's actually one of the conclusions that I come here on the next slide. So technically, on a let's say a macro scale or a definition scale, they added Bitcoin as legal tender and they made the digital wallet, right? This was a law that was passed. It was the Bitcoin bill. And then this was the creation of the wallet that's used for everybody, or that's usable by anybody. And it it redefined the way that governments interact with people related to money. Because governments right now, every government pays for roads, schools, hospitals, basic core infrastructure. But not every government pays for basic banking. Not every government just has financial inclusion as a program of the government. So this was the first time that a new type of national infrastructure was added to the repertoire of a government, and that's financial inclusion. And that's financial tooling, financial infrastructure. In this case, again, with Bitcoin and in a particular way, but central banks are the closest to it, but central banks don't directly deal with people and don't, directly ensure that people get what they need. So it's a really innovative type of way that the government kind of went into it. Um, it's also important to note that crypto in particular has a big role in this. Like, why not just have a Venmo for everybody? Well, Venmo for everybody is great. There's like Venmo for banks, right? Zelle, RTP, FedNow. There are a lot of systems in the US and internationally. I mean, Bolivia has a interbank payment network here where I live. But crypto is different. Crypto is different for two reasons here on the screen, right? It's access to money with only internet. Only internet. I don't need a bank. I don't need a government. If I want to have Bitcoin, I just need internet connection and I can have my own money. And within that, when I say my own money, it's my money. The rest of my money, right? I use Chase, I use USAA, I use, a few different other banks. But like my money on their accounts it's technically their money, right? When Lehman Brothers in 2008 went down, it's like that was their money and people had their money with the bank and that failed. So that's a counterparty risk that all financial institutions hold. Generally, they're trustworthy. We've seen from 2008 that that's not always the case. So crypto is powerful in that way that it's money on internet, right? So anybody can come on and anybody can go off. And that's super important. Not as much for the US. Well, hopefully it stays that way. But here in Bolivia, I mean, there's political turmoil all the time. There was a coup like 2 weeks before I got here, right? There's election. There are riots all the time in the streets here. And the money here is impacted by the political stupidity of the corrupt politicians here. And that impacts the millions of people that live in the country and that use the money and that are reliant on that money because they live in the country. Well, crypto is internet money. So I can access USDT or USDC or EURC or any other digital liability, digital asset with just internet. And that's freaking powerful. Before I move on, any questions or comments on that? You're muted, Max.
Jen, were there any questions from the
Yeah,
chat you wanted to raise?
no,
Was there anything
nothing.
you wanted clarified
Yeah.
before
No,
Tristan moved
this
on?
is great. This is great. Thank you.
Okay, excellent. And then, so no, Tristan, I think you sort of told sort of an interesting story. I don't know if this is going to sort of happen later in your presentation. You're going to sort of get to maybe like some of the lessons learned from El Salvador's like experiment with this, because we know that some of the adoption metrics sort of have waned after the sort of the first sort of big boom of access, inclusion, usage of the platform. Some of El Salvador's international partners have sort of made them scale back their ambitions in this space. But if that sort of comes up later, I'd be sort of happy to talk about that there. I'd be happy to chat about that now, or we can move on.
Yeah. I don't mention the adoption metrics.
Hmm.
Actually, um, in El Salvador, after the initial adoption, it
Hmm.
really flattened out. I'm not gonna
Yeah.
lie. Most of the use of the system is on dollars, which I want to be very clear about and
Hmm.
proud of,
Yeah.
because dollars is more of a money and Bitcoin in this case is more of a payment rail to go
Sure.
to use it internationally. Like I'll give another example of there was there was an importer exporter that I met while living in El Salvador. He buys and sells cars. So cars
Hmm.
are moving across borders and he has to move money across borders.
Hmm.
Well, if he's paying 3% for every transaction, that comes out to be a bunch of money that he loses for paying and getting paid for his business.
Hmm.
So what he actually did is he used the app and he would receive money in Bitcoin and then convert it to dollars. And
Hmm.
then
Hmm.
he would keep his dollars and then at the time of payment he would convert it to Bitcoin, send it, and then his counterpart would take Bitcoin and convert it to dollars.
Hmm.
So
Hmm.
in that case, it's like it was just used as a payment rail. The IMF in particular, as a partner of most countries, right, the International Monetary Fund, um, they're the funding partner for most governments, and they're obviously a dollarized corporation. They issue their own SDRs, which as itself is a bit of a basket of currencies, primarily based on dollar.
Hmm.
And Bitcoin is not in their basket, and Bitcoin is a volatile asset, and it has no government or let's say economic um, logic,
Hmm.
right? The,
Hmm.
the price of Bitcoin is based on market demand,
Yeah.
which if you don't have a government and you don't have a company and you don't have a thing, it's like, what are you evaluating it on code and scarcity? It's a new hypothesis of monetary evaluation for price discovery.
Hmm.
So that makes it a dangerous asset from the IMF's perspective. So I can understand their perspective. And they came back to El Salvador, I think it was about a year and a half after the launch of the app, and they gave a $1.4 billion loan, which I actually think is a testament to the power of that system because we got to show financial inclusion and show volume and velocity of money within El Salvador
Hmm.
that make recouping the loan from the IMF to El Salvador more
Hmm.
probable because they have more statistics and data and access through records and digitization. But part of that deal between IMF and El Salvador was that they would remove the requirement of legal tender and the
Hmm.
requirement of needing to receive it, which fine if that's the thing, then okay. I mean, that's $1.4 billion going to the country.
Hmm.
Economic
Hmm.
development, good.
Hmm.
And people still get access to use the tools in the way that they did yesterday.
No, I think that's an excellent sort of point, Tristan. Like a lot of like countries, and we talked about this sort of on our last session that we did last week. We spoke about like Brazil's PIX. We had a moment of the conversation where Paul and I were discussing central bank digital currencies, and like some of these national initiatives that have spun up sort of since El Salvador and Chiva sort of like pioneered it are getting these instant payment tools sort of in like retail customer hands, right? For small, medium businesses. I think like the small businesses, the Papusa example, I think is very, very compelling, right? At the beginning of your conversation. But yeah, like and Chiva being sort of, you're in a dollarized economy already, and now it's principally running on dollar rails. And so maybe that vision for fast, cheap, instant Bitcoin settlement wasn't completely realized, but you were able to scale something up. And then, I think, at this point, my understanding is, yeah, El Salvador's, Bitcoin exposure is basically just its government's sort of national reserve that it holds, and sort of, but like you said, something, Chiva was able to be built, and sort of interesting results. Jen, did you say there was a question?
No, I was just telling people if they had questions to put them in the chat. Yeah.
Excellent. And then, so Tristan, like, I would love to sort of move on to sort of like how you've sort of like lessons that you've sort of learned from this experience, or maybe you tell me where you were going next with your presentation.
Yeah, I was gonna go into a bit of context and educational side
Go
of
ahead.
like blockchain Bitcoin.
Sure.
Um, Firstly, this is Alvaro. I worked with one of the nonprofits in El Salvador called Mi Primer Bitcoin, and they teach kids about money, but they teach them about digital money and crypto, like how to have your own or use it, send, receive, etc. And This kid, Alvaro, he's growing up in a totally different world than his parents ever had access to. His parents, when they're trying to get credit, they go down the street and they pay 200%
Mhm.
because that's the loan shark
Mhm.
on their street. That's what they have available. 200% is the actual statistical average in El Salvador. So him with access to digital finance through his phone and internet, he can access, I don't know,
Mhm.
15% as opposed to 200 or whatever, 50. Even if it's seen in the US as predatory, let's put it 50.
Mhm.
That's a quarter of what his parents had to pay just because they didn't have access to this type of stuff.
Mhm.
So he's growing up understanding the world, understanding money in a totally different context than his parents, even us. Honestly, I'm gonna say it. I'll make a bold proposal here. Better than us,
Mhm.
better than you and I, because his world of money is dollars and borderless non-government currency that he can own himself without a bank or government. That's kind of wild. None of us have that mental map of money. He does. And he's a kid in El Salvador, right? Outside this brick building is trees, right? That's his world, but he's more advanced in some ways even than us.
Mhm.
So let's on the point of education. I,
Mhm.
I I want to be quick on this, but I also don't want to be quick because it's super important to know and interesting. Blockchain is the basis of all of this. Everybody uses the term blockchain. Very few people know what it's actually talking about. It's a database. It's a way of storing data. So you can think of it like layers. One database. Your computer has a database. You store information on your computer. You have an Excel sheet and you type info, and there it is on your computer. That's one type. Then you have a distributed database like cloud, right? The Google Drive. Google Drive, you have information here and it uses the internet, and you can connect to the same information on a bunch of computers. The difference between blockchain and Google Drive is you have distributed confirmation and cryptography on top of it that makes the information immutable. And everybody is confirming it. With Google Drive, if you have one person change the data, it changes everywhere. And ultimately, that's Google's information. It's on their servers, right? It's on their like actual warehouse. If Google goes down, your drive goes down. That's it. It's not your data. With blockchain, it's actually duplicated, right? So you can imagine this circle. Can you see my mouse?
I don't. Yes, yes, I
Okay.
can.
Okay. So this circle here, you can think of this like Google Drive. We all connect to Google Drive. That's awesome for efficiency. I studied organizational psychology. So centralization, great for efficiency as long as we trust the central player. I do trust Google, no problem. The difference here is now we're going to copy and paste and replicate that core a bunch of times. So it does take more work. Blockchain is tough, it's harder, it's heavier, but I don't have to rely on Google, or in this analogy, the analogy of Bitcoin's creation, I don't have to rely on Lehman Brothers to keep my money safe because I can have it myself. So, where is it in the world of all the tech stuff in the world, right? So we have apps like Instagram, right? This is called front end in dev world, right? In tech world. Front end is where we see stuff, we change stuff, you know, then we use the internet, HTTP, right, to send data, and then we have to store it somewhere. So this is where the database and the cloud come in, and that's the layer that blockchain lives on. So contextually for everybody's mental map, blockchain is not an app. Blockchain is not new internet. Blockchain is a way for storing data. And it copy pastes that data a bunch of times. That's the way that it does it. This is super important. Any questions on that?
Mhm. That's solid. Thank you, Tristan.
Cool. I hope it's helping with context. Now, this is a fun one of digital currency. When we say crypto, like what the heck are you talking about? Crypto. Crypto's a bajillion things. Crypto is Bitcoin and Monero. These are decentralized cryptocurrencies. So it's meant to be like a money, right? Bitcoin is only a money. Monero is a money that is like very, very private. You can't see a transaction history. It has it and it's verified, but it's not going to be human readable and it's not going to be auditable by like OFAC or the bank or something like that.
Mm.
And they each have their benefits and challenges. I can go over each one of these individually, or I can wait for you to distribute this after. You tell me what
It
you
would
would
be
prefer.
great if you could just go very briefly through all of them because we're trying to introduce some of these ideas to people who don't have a lot of background.
Totally happy to. I spend most of my life doing this. I half the time I actually build and half the time I'm teaching because it is complex. So there's decentralized crypto, that's like Bitcoin. Bitcoin and Monero, it's a bit of a category on its own. Utility cryptocurrency, these are like platform cryptocurrencies. So if you've heard of Ethereum, if you've heard of Solana, Hedera, Polygon, they're called L1s, layer ones. They're the actual blockchain, and they have their own token. You need to use this token in order to use the blockchain. So it's useful because we'll get into some of the other applications of blockchain, but you can use blockchain in other ways than just money with these utility cryptocurrencies, right? So it has benefits. It's actually useful for stuff, and it does have some speculative increase in price as applications built on that database, right? Applications built on the database of the blockchain become useful. I mean, if there's an Instagram that for whatever reason, if somebody wants to make an Instagram with immutable data, then you can do that and have your pictures stored forever on a blockchain. It's not really helpful, but that would be an app that would make these guys useful. And that would increase the price because more people would be on this blockchain-based Instagram. So you would
And
need to use that coin and the demand would go up.
And then Tristan, I think sort of a great example of like what would make a network like Ethereum or Solana valuable is what you have next, right? So stablecoin, many people call sort of the killer app for these programmable layer one Bitcoins, right? And so you talk about sort of an application that you might run on a network like Ethereum or Solana. Ethereum and Solana are the Google Cloud, right? Based on your previous analogy, right? They are this a database. And then ultimately, something that you can store in that database are digital tokens like USDC, USDT, BUSD, depending on how big a fan of Binance you are. But those are sort of dollar pegged digital assets, right? Stable coins are principally dollar denominated in global crypto markets right now. There's some euro stable coins. We talked last week. There's some local currency stable coins that are starting to see in emerging markets. But that data that sort of underpins all the dollar denominated crypto assets is stored on a layer one protocol, a Solana and Ethereum. And a lot of the stablecoin issuers actually issue their token across multiple networks. And they're able to sort of take advantage of almost arbitraging sort of the relative transaction costs across all the different networks. Sometimes it's going to be cheaper to execute something on Ethereum. Sometimes it'll be cheaper to execute something on Solana. And that's why you would be incentivized to sort of build your dollar peg token across sort of a variety of networks. It provides some diversification. If one network is down or latent, you can still execute transactions on the other network. As opposed to, like you were saying before, Bitcoin is just Bitcoin unto itself. It has its own thesis, it's its own thing. But there's a value to these programmable databases, right? The utility cryptocurrencies. I'm sorry to take the wind out of your sails, but you set me up for that, and I wanted to.
Oh, you hit the home run on that. Stablecoins is all the hype right now. Every
Mhm.
bank is making their own. JP Morgan to Societe Generale, like investment banks, international banks, IDB, the Inter-American Development Bank. The World Bank has its own crypto group, right? They're focused on stablecoins. Um, I didn't put too much more on stablecoins in this presentation, but definitely happy to continue on that because it is the way that countries are adopting cryptocurrency right now. We're actually doing it here in Bolivia. We can get into that a little bit after. So perfect. Thank you. Home run on the stablecoin explanation. One thing I do want to point out in the challenges with stablecoins is you have central issuance, which is a little bit different, well, definitely different than Bitcoin and then Ethereum and Solana because a stablecoin, USDC, that's made by a company called Circle. It's now a public company. But USDT, for example, is made by a company called Tether. It's a dollar from Tether. So how does it like technically work? Um, Somebody gives Tether, the company, a dollar. I might send from my bank account to Tether bank account a dollar, and then I'm going to provide for them a blockchain address on probably Ethereum or Solana, and they're going to give me a USDT, which is a tokenized liability of that dollar. So they keep my dollar on their bank account. That makes interest, and they keep that interest. That's the business model of Tether at Circle. But I have this digital dollar that I can send on the blockchain at any moment and any time, and I can own it myself, and I have all those kind of crypto benefits of blockchain, right? In the economic side, the benefits are it has consistent purchasing power because the dollar has fairly consistent purchasing power.
And then I think you mentioned sort of the centralized issuance of stablecoins as being a risk factor, because something you have to do ultimately is trust that the stablecoin issuer will have their US dollars as sort of in a liquid redeemable form, right? So that on
Exactly.
demand you can turn that digital token over to a Circle, a Tether, and you are able to believe with a degree of certainty that they will have one for one the reserve assets that they claim they do. And for the most part, like these major stablecoin issuers, are holding on to short-term U.S. Treasuries, T-bills, and in the United States, the sort of the stablecoin legislation that passed recently mandated that U.S.-based stablecoin issuers, regularly report on those reserves to have sort of short-term, highly liquid cash and cash equivalents in reserve for redemption on demand. Like I know historically a question with Tether as an issuer has been, they are not, regularly audited to the satisfaction of some participants in the market. And, you have the sort of a rivalry between USDT and USDC. A lot of it comes down to sort of how their reserve assets are structured and audited and reported. Which again gets to the risk of being reliant not just on the value of the U.S. dollar as it relates to the government and fiscal and monetary policy there, but also whatever entity is your third party stablecoin issuer.
Yeah, spot on. Actually, if you have questions about kind of the real implementation side of it, what we're doing here in Bolivia now is we're making a stablecoin out of the Boliviano, in collaboration with the banks, in collaboration with the government. So it's a bit of a private-public partnership, but it's using the attestation standards of USDC, but for a Boliviano so that people here in Bolivia can take the Boliviano, digitize it, and then exchange it for Bitcoin or exchange it for USDC or USDT because banking rules have another whole thing. We can get into that. We'll get into it. I want to keep going.
Yes, go ahead, Tristan.
We could make this like another 3 hours if you guys want.
I know, Tristan. This is the same problem I had last week.
Altcoins, right? Trump coin, Dogecoin, Banana coin, Your Mama coin. These are these are marketing and novelty for the most part. Like most NFTs, for example, the whole NFT thing, you can attach some utility to it, right? You have to have the Trump coin to go to the Trump dinner or whatever you want. But that has nothing to do with crypto. It's mostly novelty and marketing and or money laundering and or, just ways to engage the market in different ways. Um, uh, Different business models can be made out of altcoins. Then you have CBDCs. A CBDC is central bank digital currency. That's an actual liability on the central bank for their money that's available on the blockchain. And again, blockchain is anything with internet generally. You can have private blockchains, and a lot of the CBDC networks are proposed for private blockchains. But when we think about it, we're thinking like an Ethereum, Solana, central bank liability that's
Mhm.
like publicly available. We've actually signed a partnership with the Digital Euro Association, as well as the guys that have built the kind of parallel stablecoin for the country of Ghana. And there are a lot of different projects happening with eSeti, eNaira, Dcash, Sandollar, and Caribbean. Honestly, none of them have really shown to be super successful. Just like, I mean, you can call El Salvador as trying to Bitcoinitize the economy. I mean, that the demand for adoption just wasn't there. So it's not like we're trying to force something. We're trying to enlargen the area of access that people have for resilient financial services. So in these cases, if somebody wants a liability directly on the central bank, if the central bank is willing to do it, then they could issue the central bank digital currency. Most countries are going about it through stable coins because then it's like the central bank issues their money, the money is digitized, and that creates its own market. And a lot of this has to do with FX risk, right? Foreign
Hmm.
exchange risk. Because, I mean, if you're a secondary economy, Bolivia, you have your Boliviano, and you issue a CBDC on your central bank, but your central bank doesn't have strong foreign national reserve to upkeep its foreign exchange, then the exchange rate or the inflationary rate of your local currency is open to the internet.
Mhm.
You lose your monetary policy, you lose your fiscal control. It can be dangerous. That's actually this is a large portion of the work that I'm doing here also in Bolivia is supporting them with the understanding and design of their CBDC slash stablecoin management, liquidity, exchange,
Mhm.
onto banks, making sure the banks can use it, that it's done responsibly. And then you have the private networks of like FedNow, Pix. I'm so happy you mentioned it, Matt. Like Pix, if you're in the room and you don't know Pix, and you're at all interested in money, like look it up, study it, spend at least one whole hour, probably three, understanding what Pix is because it's legendary in the world of money on a national scale,
They've
financial.
been enormously successful in Brazil rolling out that instant payments infrastructure. And we discussed it briefly with Paul Brigner last week. But we're going to have Marcelo Prates from Stellar come in and speak in this series. And he actually was at the Brazilian Central Bank when they created Pix. And so I'm going to make Marcelo talk about that for an hour to Jen's crew in the coming weeks. But you're
That's
welcome to join for that, Tristan. You'll love it.
up to. Yeah, maybe he should come here to Bolivia. We're doing they already have some central bank kind of banking cores and interoperability, kind of like a FedNow.
Mhm.
FedNow in the US is a program that only banks can get into, but it allows a bank-to-bank transfer basically instantly. Um, these, right, they're the most efficient from organizational structure and technical structure because you don't need the whole like blockchain validation and mining and the whole thing, but we have our same issues as in the past. Cool. Market adoption, mobile wallets, mobile money is already surpassing bank accounts. I mean, I don't know about you guys, but I definitely would rather use Venmo than Zelle or Venmo than freaking ACH or Swift.
Mhm.
Or because I'm already adept at crypto, I'd rather use crypto than any of it.
Mhm.
Because all crypto is give me your address and I'll send you the money. And it'll be there in seconds. And it
Mhm.
actually goes from me to you, as opposed to doing the whole ACH and wire transfer and the whole deal and wait days and pay more money. It's just better money. The process that the world is going through now is figuring out how to use this type of better money responsibly because fraud, because scams, because miseducation. I mean, you got to know how to use it. Otherwise, you're going to lose it. Literally, not your keys, not your coin. I mean, there are 100 examples of how you can lose cryptocurrency. And because it moves quickly and it's immutable and immediate, I mean, you send it to the wrong address or somebody gets access to your wallet and sends it to a different address, it's gone. It's there. There's no clawbacks on
Yeah.
like Bitcoin. Bitcoin doesn't have a clawback.
Mhm.
Your bank does. If somebody hacked your account and sent your money, your dollars, or spent it on, I don't know, some shopping spree in Saks Fifth
Mhm.
with your card, MasterCard can claw back that money. The bank can claw back that money and make you whole and protect you
Mhm.
because you aren't a financial institution.
Mhm.
But crypto kind of puts you in that position, which
And
has
this
benefit.
is And Tristan, this is why you see like applications developed that use cryptocurrencies principally sort of as a back end sort of means for settlement, for execution, for moving money around. Like you have people like yourself that are very much true believers that live and breathe it, that are native to the space, that are willing to sort of send crypto to a wallet address and sort of assume the whatever risks because you're familiar enough with the space that no, I'm sending this to the correct address. I'm willing to receive this instantly. But you have platforms and applications. I suppose Venmo is a sort of a good example of this, where you
Great.
are able to sort of send money, but there is this intermediary, this user interface, this organization that is, you have a Venmo account, you're executing to sort of a person that you know on the other side. And although crypto itself, like the networks, don't have clawbacks, people that are building applications that are running on that payments infrastructure are sort of able to sort of build that in as part of their product design. And
Exactly.
so you can have, like yourself, sort of the true believers that are running on this, but then you have, like you've described, sort of the Chiva users in El Salvador who are principally moving US dollars around on the application, right?
Exactly.
And we
Exactly.
actually have a question here from Kevin McCarthy, who asks, he says, I may be misunderstanding the benefits of using crypto, but it sounds like one of the best use cases is for transferring money. But if
Mm,
governments are implementing stable coins or other types of cryptos nationally, does
mm.
it imply more people holding or saving the crypto, not just using it to transfer money in US dollars, for example? So
Well,
if
so I
so,
think,
what
well,
kind of relative risk do we see in holding various types of crypto versus holding traditional national currency?
I think, hmm, I
Oh,
think,
Tristan,
yeah, go ahead,
yeah,
Tristan,
yeah,
you go
yeah,
first.
yeah.
That's a great question. It's happening here in Bolivia that the economy is organically moving from fiat to crypto out of demand because, well, it's different than in the US because US has dollars, right? Here we're not, the country's not on dollars. And so their currency, the Boliviano here, is not as stable or strong as the dollar. Um, People's general access to dollars is limited because it goes through banks. Banks charge more money, they take longer, and they have limitation and compliance. It's just tougher. So, yeah, people are starting to keep their life savings in crypto because there was an announcement 6 months ago here in Bolivia. You can have a dollar denominated bank account with the Banco Nacional de Bolivia. It's actually a partner and a client of ours. But the national bank has dollar accounts that are dollars, dollar, dollar, dollar. Um, the central bank made an announcement like 6 months ago saying, yeah, guys, sorry, but all your dollar accounts, they're still there, but you're not going to be able to withdraw those dollars. If you want to access your dollars, you're going to have to withdraw it as Bolivianos at the exchange rate that the central bank dictates. That's fiscal control, that's monetary policy, that's the central bank trying to back and guard the Boliviano, but that comes at the expense of people being able to access their dollars. So, yeah, people just go onto crypto, right? I live between multiple worlds of crypto and banking and continents of Latin America and Europe and US. What's the easiest? Well, the global money, right? The global money is the easiest. So I keep some of it in USDC, some of it in USDT, some of it in BTC, some of it in Chase.
Mm.
I mean, it's a diversified portfolio. But for people that are not as lucky as me and that live here, yeah, their life savings is going on to crypto and it's going faster than people would have imagined.
And then
It's not
I
a
think
big
it's even,
deal.
go ahead, Tristan.
I
No.
was just, it's not the ideal. It's not the
Mm,
ideal because the last part of your question was, what's that risk, right? That
mhm,
risk is your life savings is now freaking dependent on Tether,
mhm.
right? Tether's
Yes.
solvency or Circle's solvency. And that's not a
Mhm,
government. That's a freaking either private or even if it's a public company. Come on.
mhm,
You're putting your life savings on a company.
mhm,
Whereas in the past, people have put it on a government and or a physical asset like a gold, uh, an asset. So we're going from government. Well, I'm writing a book called Crypto for Countries, and one of the first chapters is like meat, metal, money, math as the evolution of money, right? So people traded meat and then they traded money. Yeah, first metal, whatever. We're coming to an evolution where your money, it's based on math because it's all digital. And then the evolution within crypto is how is that digital money being stored and how is it backed, right? The
mhm,
central bank digital currency, that's
mhm,
backed by the central bank. The stable coin, well, technically that's backed by Circle or Tether or the company. So you do have counterparty risk on different levels based on what you use. I'm not going to come with a recommendation because everybody has their own situation. Sorry, Max, you're going to say?
No, and then so it's like another interesting point I liked, and the question was, you said like the principal value is instant payments, right? Like settlement, real-time settlement, and like why would you keep savings in this asset class, right? And I think Tristan, you do a good job of sort of articulating there are parts of the world where it is more attractive to be in a dollar-denominated asset, and stablecoins sort of create a situation where dollar-denominated assets become sort of freely and relatively easily available over the internet. And so, people want to hold their savings in dollars, even if they're non-interest bearing dollars, right? Like a stablecoin does not pay you interest.
Yeah.
However, just, there are like certain economies, and we certainly saw this in Argentina this week, where you can see sort of, these rapid devaluations of currency, and people are willing to, forego interest-bearing deposits if they can just have them denominated in dollars. The other side of that equation is also like some cryptocurrencies, try to make sort of a savings or investment thesis. Like the people that are sort of ardent believers in Bitcoin, or say, Bitcoin is structured to be like digital gold. It's inherently deflationary. It would hold its value sort of against currency debasement. Whether or not that true is up for discussion, but like those are sort of your two key savings theses that I see with digital assets. People that want sort of to go to a stable coin to sort of have the ability to save in some kind of asset that's denominated in a currency they wouldn't otherwise have access to, or you sort of have people that believe in the Bitcoin digital gold thesis, and also would like to use that as a savings vehicle. But Tristan, I think you did a really good job of articulating the risk with US dollar-backed stablecoins as a savings vehicle, because at the end of the day, you have to trust the reserve asset mix that Tether has in Switzerland, right? You're not trusting, you're not using sort of local banks, local currencies, your own central bank, which might have the flexibility to respond to a crisis, with their savers or the value of those assets, more easily. But I think your explanation there was great, Tristan.
Awesome. Yeah, I could make it a little bit more complicated by bringing in tokenization. Let's leave that for another time. Tokenization is the representation of something on the blockchain. You can think of like USDT as a tokenized dollar, but then you have bonds, and then you have buildings and land assets, and you can represent those and trade those on blockchain as well, which kind of changes the way that you might save your money. A conversation for another time. If somebody's super interested, put it in the chat or message me later. There's a ton of volume. This is actually old. It's more than $500 billion in monthly. No, sorry, that was totally not correct. But more than 625 billion monthly volume in stablecoins. This is just in stablecoins, and it's actually increased since then. This was from, I think, 6 months ago. All right, let's change gears here to think about national adoption of digital currency, because that's my focus, right? It's a process. It starts with a general national strategy, a steering committee, a regulatory body, a task force. In El Salvador, it was CNAD. It ended up with the Bitcoin bill. So you have to first, as a country, well, Trump did this, right? He declared there is no CBDC. He declared we're going to actually approve the Genius Act. Those came out of the result of the general strategy that the president has and the regulators have for the inclusion or adoption or integration or regulation of crypto, because it's a thing. And now that it's a thing, we want to take care of it. So we create a regulatory framework for it. We define a stablecoin versus, well, one stablecoin versus a different stablecoin versus a Bitcoin versus an altcoin versus a protocol token versus a something else. And so you have these kind of regulatory frameworks that come out of each country based on their strategy of how they want to regulate crypto. That's the Genius Act, right, in the US. the Bitcoin bill in El Salvador, MiCA in the EU. Then you have licenses that come from that regulatory framework, and that allows the creation of a virtual asset service provider or a crypto asset service provider. So, like an entity that can serve the general public, exist in your jurisdiction, and do crypto stuff, issue a stablecoin legally under your framework, under your strategy. And then you have the actual business establishment within the license. So to be a CASP, you have to have, your KYC and AML, know your customer and anti-money laundering practices, liquidity management, banking on and off ramps. So you have to like set up an actual business framework for integrating so that people can go from dollar to digital asset, whether that's digital dollar or whatever. This is what Coinbase is made from, right? Coinbase has KYC ML. Coinbase has exchange. Coinbase, Binance, Fidelity, Venmo now, right? They all use these under the license, under the framework, under the strategy. So it ends up with a Venmo plus crypto. And it ends up with a Coinbase that has all its functionality, or Binance or Fidelity crypto now under its particular license or under its particular business structure. Does this make sense?
Mhm.
Cool. That's the general process. Within a business or another way of thinking, the kind of roadmap you're going to go to, start with regulation. You got to figure out taxes. You got to figure out your legacy banking integration. Now I'm thinking more from the hat of like, I'm a Binance or I'm a Coinbase or I'm a Fidelity, right? So I have to understand where the regulation is, what the tax structure is, how I'm going to interact with the money that already exists in the world. How am I going to account and report that exchange or movement? Obviously, there's fraud, there's scams. I mean, El Salvador, one of the toughest lessons was how much you really need to end with this user education to make it successful in the end. But you need to design that into the system early on. And then establish your technical network. So you're going from, you mentioned multiple blockchains, right? USDC is Ethereum and Solana and Hedera and Stellar and Cardano and blah, blah, blah. So how are all those going to talk to each other together with the legacy banking, together with KYC, together with AML? Set up your custody, your payment networks, your hardware. So in El Salvador, for example, there are hundreds of ATMs that you can scan a QR and put in your cash, and your cash goes to crypto at the ATM, or your crypto ends up in cash. And so we had to kind of integrate this hardware. And for a lot of developing countries, this is a key element. I mean, they're cash based. And then you have to teach people how to use it. This is absolutely undeniable and probably the hardest part of all, because tech you can control. People are always stupid.
So we have a question here from Jillian Zernhelt about bank accounts. So since you need a bank account to use a digital wallet like Venmo, how does this improve financial inclusion?
Awesome. Great question. Venmo and bank accounts in the US is a lot more mature in adoption. The Chivo application as a mobile wallet, for example, in El Salvador, and it's the same with Tigo Money or M-Pesa. If you've heard of M-Pesa from Africa, is a well-known digital money case. You don't actually always need a bank account in order to have a digital money wallet. There's an app here in Bolivia called Yape. You don't need a bank account. It's built by a bank, but it's not technically a bank account. It's a digital money account. It has slightly different regulatory framework. It has a different license. The business is fairly similar, but you're not going to have like access to credit generally from a mobile money wallet. You're going to have probably limited functionalities. Yeah, it actually alludes to the other person's question before of risk and benefit of people keeping their money on crypto. These are like, am I actually just not going to use a normal bank? Right? Can I live on Venmo and Bitcoin? Like, I don't know. Well, I do know, and the answer is yes, but the transition from here to there is takes a bit of a process. Um, I will say here in Bolivia, and then for a lot of developing countries, mobile money wallets have less access for creditors on the on a person who might owe money. So, for example, if somebody owes money to the bank and they have money in their mobile money wallet, that those assets cannot be seized by the bank because it's in a different category of liability of the person. In this case, there are benefits of not having a bank account and just having a mobile money account. Here, at least here with local regulation, it changes per country. Did I answer your question?
Yeah.
Awesome. Cool. So where are we now? Where do we find ourselves? This is a confusing world. VUCA, volatile, uncertain. Um, we need to definitely acknowledge the developments that have happened over the past 100 years. A lot of crypto people, and I hate to call them crypto people, and I hate to be categorized, but I'm also both sides of it. A lot of crypto people say like, oh, whatever, we're gonna end banking and I'll live on crypto, which again, you definitely can. And there are actually benefits and there are actually risks. But the safe place and where I would suggest we stand is the middle ground, right? So we take the best practices of banking, which includes consumer protections, includes anti-money laundering. We don't want to support people who kill people. And so generally, money laundering is a practice of filtering and trying to gauge if this money was earned or is supporting bad stuff in the world, which I mean, depending on where you are on the political spectrum, you may be for or against. I generally try to stay in between. And AML is really important. Consumer protections are really important. If you're a purist within cryptocurrency world, that those don't exist. They're just incongruent within the system. So where we stand is let's use the banking systems, use the modern technology that connects the world faster and cheaper, and then blend them. And that's where we are today.
Hmm.
Beyond or past the money consideration of crypto, there's blockchain, right? Currency transaction is one of them. Supply chain management is, I mean, you have your database and you distribute that database and you have people who don't necessarily trust each other. You know, one person's buying grain from Indonesia and the other is selling metal in Nicaragua, right? So they don't necessarily trust or care what the others are, but they might need to know data and they might need to know that that data is trustworthy. So, for example, in the past, I've worked on a lot of supply chain management. Actually did a consultation for Coca-Cola, right? They want to access different parts of data. They want to have a unified supply chain. Um, Blockchain can be definitely used and leveraged for that. More than anything, it's actually used for supply chain finance. So you would have an event-driven thing, which is like the grain exporter from Indonesia. Once they sign their bill of lading for the grain in Indonesia, that can be communicated with confidence to a creditor in the US who's buying futures of that grain. And they have trust in the information so they can finance the grain while it's in transit for the next 30 days. Sounds kind of maybe outside the scope of a lot of our thinking, but in the world of supply chain, that's really big.
One of the applications that we're looking at is legal titles and for land tenure, and especially conflict affected states or states that have weak institutions, that this is proving to be a very interesting way and a very compelling way of tackling that challenge.
100%. 100%. The tokenization of assets can be a really wide range. It's one of the big conversations that we're having now with the government. And I mean, 30% of the lithium reserves of the world are in Bolivia. And now that they're going through a financial crisis, they want to access the value, the locked value of those future lithium resources. So they can actually represent either a contract or a right or a land title on chain and then create liquidity for that because right now the central bank needs dollars. So they could say, here's a future ton of lithium from this origin, or a right to mine that lithium from this origin within Bolivia, I can tokenize that, represent that on chain through a legal framework, and sell it to an investor in New York and get dollars, because I, as a central bank, need dollars here in Bolivia right now. So tokenization of assets, exactly like you said. Um, there's also the land rights and land titling part of it. I didn't put that on here. It's a huge use case. There's a great platform called the GBA, Government Blockchain Association. They have a lot of use cases on that. GBBC as well, the Global Blockchain Business Council. They span the whole gambit of blockchain uses. Voting, we're actually doing right now. We just launched. Guys, this is exciting. You're learning in real time. Um, we just launched a partnership with both of the presidential parties here in Bolivia for them to support putting their election results on chain. So it's actually an NFT of the table's voting results. There's no personal like vote ballot information, but it's like this many people voted for this candidate in this location on this day, and it's happening next month, and we're connecting it on chain. And this is like, I mean, it's historic for the world of democracy. This is one of the big projects in Impera Strategy is we just went live yesterday. Yesterday we minted our first uh, voting record on chain, and you can have it as an NFT in your MetaMask wallet or your Phantom wallet or your crypto wallet. You can see a blockchain voting record, and that's immutable. That exact attack vector was actually used in 2019. There was a socialist, very controlling regime here in Bolivia that did crazy voting fraud in 2019 because there was no data resilience, because people took pictures, but they couldn't coordinate or prove that those pictures were the truth and that those pictures came up to a sum of this candidate won. Venezuela did something different, but they didn't have blockchain, so now we're adding blockchain. Healthcare records, global identity, digital identity is a huge one. I worked with Salesforce on healthcare records. So they took like people's information and put it onto a private blockchain so that the regulator could see that the clinic was being compliant. And it just made stuff easier. But it's blockchain, right? Outside of Bitcoin and crypto and USDT, right? There are a lot of uses of blockchain. And then, of course, intercompany payments extends onto that. Next steps, and this is a more kind of another more recent project, Bancolombia, which is the largest bank in Colombia. They made a crypto platform with their own stable coin and access to all the crypto assets, because the Colombian peso is also not the dollar, right? So people wanted access to that. So I helped Bancolombia kind of build their crypto platform. That's it. That's my presentation.
Well, thank you. Thank you very much, Tristan. I know we went sort of longer than we were expecting to. But I just maybe wanted to turn it over to Jen if you sort of had any final thoughts before you wrapped it up.
Yeah, I just wanted to see if there are any final questions from our audience before we cede things over. So I just actually have a question for you about, there's, and I think these are two unrelated things, but will have an effect on one another. So one of the reasons we set up this series is because we are thinking about the future of what foreign aid will look like. And I always remind people that development is not the same thing as aid, right? So they're two different things. And, I'm working on a book right now on this. And foreign aid to me is a tool of foreign policy, and it's always going to be there. And so what I'm trying to do is engage in ways to make it better and less harmful and less pernicious, but recognizing that it is a universal tool of foreign policy. I think I used to work at USAID, and a lot of my, dear friend aid diehards think of aid as development. Aid can cause development. Aid can cause lots of things, but we're seeing a huge transformation right now in that space. Of course, USAID is no longer with us, and I think what we're seeing is that institutional transformation coming from the US, just because the US is such a large player in this space, is catalyzing a lot of conversations about what the future of development assistance can look like, what the future of aid will look like. And that's one of the reasons why Max and I were having these conversations, thinking about what role will fintech play in replacing some of this? Is it a replacement? It's more like a complement. Over the past 8 months, since these changes were made, are you seeing any changes in the field? What kind of thoughts do you have?
Jen, I love that you go in that direction with it. Um, yeah, at the end, the whole money thing should be to help people. So, agreed. In the use or leverage of this technology for both aid and development is that you can more directly go to the end recipient or end user. Stellar has some really good programs that they have done, not just within the PIX framework or network, but in Eastern Europe, multiple countries actually that are right now going through either war or sanctions, and have difficulty delivering aid and or delivering, well, I would say more aid there. In the aid case, crypto is used to give money directly to a person, and that goes through a smartphone, and that's opened up through biometric ID. So that's not going to an intermediary. It's not going to a, filtered, how do I say, facilitator, or a broker.
Intermediated.
An intermediary, an NGO, right?
Yeah.
Yeah, yeah. And sometimes that's good. And in those cases, yes, you can send money directly to that NGO for its purposes. But as more people get internet and more people have smartphones and more people learn how to use them and more systems come online that allow the money to go directly to people, yeah, absolutely. Money goes directly to people who need it. Um, I can say on the development side here in Bolivia, there's kind of a pet project that I'm really, really hoping, dreaming, wishing, praying that we can get live. Is actually part of the revenue from the system that we will build with Bolivia for their financial inclusion and economic development. The revenue of that actually goes to a fund in crypto that pays people who do development work. And there is no intermediary. The intermediary is, in this case, nonprofits that are partnered with, and the nonprofits manage people, and those people get paid in crypto directly. So it's like, you have cleaned up the street, here's $5 in USDT. And that comes directly from the fund that society is paying for through its financial services. So it's a bit more of a kind of regenerative structure. And as people get mobile money, the money goes right to them. What they need to do is figure out how to organize the work so that people can actually do effective and developmental work. That's from the development side.
So, I mean, this is so fascinating because I think one of the trends, obviously, that we're observing, I mean, with crypto, but with a lot of things, is that the role of the intermediary is really changing. And as a professor here, who teaches in our international development program, preparing students for future careers, what I'm really recommending is that students really lean into the kinds of things that you're doing. The future is not going to look the same as the past did, and so there's a real opportunity to seize this moment. However you might feel about the politics, like I'm sort of it is what it is. The past is the past. We need to think about how to take the time that we have, the opportunity that's here, and think about, this is a real opportunity to reform, and do things better, not just to go back to the way things were, because we'll never go back to the way things were. Things are always moving forward. So I think your insights really provide us for a lot to think about. I just want to thank you for the time. I mean, this was a master class in all of these technologies that I hope will help our audience and our students and the community that we work with at the Center for Governance and Markets. We say that our center explores the innovative ways people come together to solve problems. And what you've just really outlined is an impressive way across, time and space and so many different contexts the ways that people are really tackling these issues. So I want to thank you for your time. Thank you for your insights. And we would love to have you in Pittsburgh when your book comes out. If we can make
Love to.
that, we would just love to have you here. And, Pittsburgh is a great example of so many of the changes that we've seen. We have a huge tech sector here. Well, we think it's huge for little Pittsburgh.
It's huge. It's huge for Pittsburgh.
It's huge
Pittsburgh.
for
Pittsburgh is the city that can.
the can, yes. Anyway, thanks, Max, for moderating this. Thanks to our audience for being here. And thanks again, Tristan, for your insights.
Thank you so much for having me. It's a pleasure. And feel free to reach out. My information is on the presentation. You have it. Feel free
We'll
to share
post
it.
it with the video and yeah, for sure. Thank you so much.
Awesome. Thank
Bye,
you.
guys.
Thank you. Bye.